The line of credit is one of the most powerful features of the home equity conversion mortgage. If you're interested in learning more about how this line of credit works, you've come to the right place. In today's video, I'm going to break down the concepts of how the line of credit functions to help you make an informed decision about your financial future. And remember, always check with your family and a licensed financial professional before you make this or any other major financial decision. Now sit back and get ready to learn the truth about reverse. And hey, if this is your first time here, please like the video, subscribe to the channel, and tap that bell for notifications so that you can keep learning right along with us. And if you have questions about reverse mortgages, or you want some more information about reverse, maybe you have a friend or a relative and you want some technical information about how the reverse mortgage works, I'm more than happy to help. My contact information is in the description right below. Please feel free to reach out and I'll answer any questions that you may have. Those over age 62 have amassed well over $13 trillion in home equity, and it largely sits idle in retirement. My name is Brian McRae, and I'm here to change that mindset. Because although reverse mortgages aren't for everyone, a well-designed reverse mortgage can be an extraordinarily powerful financial tool that can help you thrive in retirement. Today we're going to talk about one of the most powerful and one of the most configurable features of the home equity conversion mortgage, and that is the line of credit. And the line of credit especially comes into play when your house is close to or paid off. So let's assume for all practical purposes that you have a paid off home. You'll be able to unlock between 30 to 50% of that home's overall value depending on your age and your interest rate. And by default, that wealth will be made available as a line of credit connected to your checking account that you can use for just about anything. And so in today's videos, I'm going to break down some of the concepts about how the line of credit works and some of the strategic ways you can use the line of credit to integrate with your overall financial plan. And remember, I am not a fiduciary or a financial advisor. I'm a licensed mortgage loan originator here in the great state of Texas. So I'm going to talk about how the line of credit works and talk about options. But you want a fiduciary financial advisor to help make recommendations about exactly how to put that wealth to work. The line of credit is how we meaningfully interact with that $13 trillion pool of wealth that's out there in the aggregate. Now, if you're over age 62 and you have a paid off house, you might be asking, why in the world would I get a mortgage on my home that I've spent the last 20, 30, 40 years paying off? Paying off the home represents the finish line. And that's the existing social construct is we're going to pay off the house and then we're just going to set that wealth aside. The line of credit gives us a way to position and consider that home wealth without necessarily spending it. And it does this by turning a percentage of the home's overall value, usually between 30 and 50% depending on age and interest rates, turning that home equity into liquid wealth via this line of credit. This line of credit is connected to your checking account and that wealth can be used for just about anything. And strategically speaking, there is a very real way to grow liquidity by putting this line of credit in place early in retirement with the intent to not touch it because the unused portion of the line of credit grows at the interest rate of the note. Meaning the entire portion of the line of credit that is idle is essentially earning interest. It's effectively extending your capability to borrow, compounding at the same interest rate of the note year over year over year. So from a long-term planning perspective, this is a legitimate way to build predictable wealth over time to do things like perhaps hedge for long-term care or something that would allow us to plan to disperse this asset when it's at a greater value down the road. And this line of credit growth is a great way for your borrowing capacity to increase alongside your home value. So as your home appreciates, we're effectively opening up a little bit more of the value of that home for you to efficiently borrow. And from a strategic perspective, it can be very valuable to have a predictable growth path. And so if we know that the line of credit is guaranteed to grow at whatever the interest rate is, we can put that on a projectable path and have a really clear picture of exactly how much wealth we'll have after 5, 10, 15, 20 years. And it can be a great way to put some long-term planning in place to be able to set aside what that asset will be worth down the road. A great example of this is to use it as a hedge or as a part of the long-term care plan. because as you continue to age in place and age in your home, you continue to build access to liquidity through this line of credit. And from a strategic perspective, there are times when it makes sense to access the line of credit and actually take disbursements from it. And there are times when it makes sense to continue to conserve it. This is where you really need the guidance of a financial advisor or a fiduciary, someone who's familiar with your retirement plan, your existing financial plan, to help you best position that home equity and best understand how and when to spend it. The retirement income certified professional strategy, the actual financial advisor recommended strategy for the home equity conversion mortgage, is to put it in place early. So if you have a paid off house, put this in place as early as you can, specifically to take advantage of this line of credit growth. This ability to build wealth is one of the most powerful features, and it rewards you for both staying in the home and also for being conservative with actually using these line of credit funds. Effectively, we are creating a pool of liquid wealth through this line of credit from a previously illiquid source, because you really had no way to spend home equity until you put an instrument like this in place. So as you're considering how you might plan for and how you might use this line of credit, paint a picture of what you want your ideal life to look like. Start to have practical conversations about the home that you're living in, if it's practical to age in place there, or perhaps it's time to think about downsizing. But what do you want to do with your day? Do you want to travel? How do you want to spend your time? Do you need to plan for care, either bringing care into the home or potentially planning for long-term care outside the home down the road? The idea is to map the line of credit strategy to your life strategy, so you have a good understanding of how and when you want to conserve that line of credit, particularly early in retirement, and then understand once you get later in retirement how you might position those funds that have grown over time. As you can see, the line of credit is one of the most powerful and yet one of the least understood features of the home equity conversion mortgage. And the sheer amount of wealth that we're talking about is the biggest reason why you need expertise on the mortgage side, a retirement mortgage specialist with a very specific skill set that understands how to make equity available. And then you need guidance from a fiduciary, from a financial advisor, to be prescriptive about how those funds within that line of credit will be used. So this line of credit, because it's so feature rich and it also is a little bit difficult to understand, you can bet it's going to be the subject of many more videos here at The Truth About Reverse. But what if you're among the 60% of retirees who are still making that mortgage payment? In our next video, we'll explore how you can replace your existing mortgage with that payment with the home equity conversion mortgage and eliminate that required principal and interest component of that payment. This can save thousands of dollars a month and can make a profound impact at a key point in your retirement. Until next time, keep on learning the truth about reverse.